Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we begin to look at the week that was in Forex, the first thing we're going to go to is the dollar. Now we're going to pull up the charts a little bit and see the sort of range that the dollar has been, a little weakness, and I have been one of those people that's kind of wondering why. And so this week we're going to be really looking at the Fomc Minutes. And that's because we had a lot of the Fed presidents, both voting and non-voting members, speaking this week. And what's of interest is that Bernanke actually shared concerns that the economy is recovering slower than we hope. And, that's nothing new. But he also stated that the job market is far from normal. And that's also, we all can see the pain that's there. Well, what's interesting is that he kept open the option for further easing. Now, most people have thought for the past several months that, quantitative easing is off the, the radar. There's no reason to discuss it. And so it's going to be real interesting to see when these FOMC minutes come out from the March 3rd meeting on whether or not there was discussions about quantitative easing because, again, it's been off the radar. And so the fact that he's saying that the option is open kind of raised some interest. And again, printing more money means weaker for the dollar, and so the dollar that's in its range could fall back a little bit, and that also might be good for gold. What about quantitative easing for the UK? Well, there's been some bad news about the quantitative easing in the bad news about the economy in the UK. It's been said that the UK likely will fall back into recession during the first quarter, and that there was a downward revision for the fourth quarter, which was negative 0.3%. And so I believe it's once you have two back-to-back negative quarters is when you see the actual definition of recession. Now that goes opposite. Our fourth quarter GDP number for the States was 3%. So we're not in that negative area. So with that negative commentary about the likelihood of recession for the UK, once again, the discussion about quantitative easing for the UK has come back to the forefront. And maybe that's why the US is keeping it open as they work in partnership. Now, if the UK is weak, what does that mean to our other pigs? We know Greece finally has its austerity measures in check. What about Spain, Italy, and Portugal? And the ECB is scheduled to meet this week, and they're expected to be less positive. What to watch for this week? Well, we know we've got the RBA interest rates. The Aussie dollar has been interesting this week. But more importantly, we're having the employment situation, ADP on Wednesday, and the actual non-farm payroll numbers on Friday. All right, so let's start off with our market sentiment leaders. We're looking at the dollar. And we can see the strong market in 2012, but we have that inverse relationship. The dollar kind of fell off a little bit. A little move up here, but our last week we pulled back. And we see, are we going to be able to hold this 79 support price level? So far, so good. So we'll have to see. But definitely sideways, maybe even sideways to down on the dollar. A little weakness there. So weak dollar, what does that mean to gold? Well, it should be good, but for the most part with gold, we see a similar price action, pull back, and now we're trying to hold on to the 1670 support price level. We're holding on to it, but we'll see what happens from here. Sideways for gold. And finally with oil, finally for our pocketbooks, here's our 96 to 102. We broke out of that and went up to 110, and now that 102 is kind of holding up here as support. What was once resistance is now support. So we'll see what happens here. Of course, for our pocketbooks, we would love to see this break so we can get back into this. So with what we said about the euro dollar and the UK falling into potentially recession, and whether or not further Spain and the pigs, whether or not they're going to have less positive outlooks, what will we see here for the euro dollar? Of course, we're talking about the FOMC also, and maybe some quantitative easing here in the States. So it's going to be interesting. But overall, we can see really for a lot of 2012, we've been in this range of about 1.303 up to about 1.347. We've been in that range all this year. So I don't see an immediate catalyst to get us out of it, especially right now when we're in the middle of that range. So definitely some sideways price action. We are above both our 20 and 50 moving average, but you can see we have the 50 moving average right above us. So sideways price action. We come over here to the 1 hour time frames. We are above our long-term moving average. We're ever so slightly in a sell zone. And that makes a little sense because we are in the middle of the range over here once again on a daily. But again, you can see this sideways price action, and there's not a lot of trend to follow here. Now again, let's go over here to UK and the pound dollar. And you can see a little bit more strength to our action here, where we tested a 200 moving average, and instead of being below like the euro dollar, we're above, and now we're getting up here to some of our wicks. Now let's go out here to the monthly and see what we see here. Well, we see we're probably getting close to what happened here back in 2011 swing highs here. We are above the most recent downtrend line, but of course we are still in somewhat of a downtrend. We'll go back to the weekly, see if we see anything here. On the weekly, we can see where this line's drawn that we're sitting at right now. Also see at the weekly we're sitting at the 200 moving average. So we are also above the long-term moving average, and we're also in a sell zone here on the 1 hour time frame for our pound dollar. Finishing off with our dollar franc. Oops, let's shrink you down to make sure we have both of you here. Sorry about that. I'll just drag you on over. There we go. Okay, so here we are in the 1 hour time frame. We're in a buy zone. On the daily, we are just seeing the 200 moving average coming in here. We are out of the immediate zone, but you can see there is some support that we'll probably find in here at the last swing low, which was at 0.89348. Sort of a falling 4 type, falling 5 pattern here. We'll see if this 200 moving average will actually hold up as support. We'll go out to the weekly on this one just to see if there's anything more. And we can see that we're entering back into this range. So we're really going to have to watch this 0.88, 0.9 price level to see if we're going to come down here. But we are in a buy zone on a shorter time frame. Overall, the question is going to be, where's our catalyst? We're seeing a lot of congestion. We talked about that on the euro dollar. And we can see that we've really been range bound here also on the dollar franc for 2012. And I'll skip on back over here to the pound dollar. And the pound dollar has had a little trend to the upside. And this is the highest we've been in 2012. So the pound dollar seems to be the only one that has some type of trend that we can follow. As we come to our watch list, we're starting off with our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, looking for that consolidation, looking for that congestion, the market taking a breathe, and then breaking out, preferably in the direction of the trend. Right now, we're going to be watching the euro dollar, the pound dollar, and the dollar franc. As far as our inside bar watch list, was watching the high and low of today, comparing it to the previous day to see if we're within that range. But right now, we don't have any candidates. Here in our education spotlight, we're talking about the balance that every trader needs to have. That balance to being a successful trader is to marry your technical skills and your mental skills. You know, we're such big proponents of trading plans. So you got to have your trading plans. You got to have things documented. You got to know who you are as a trader. But at the same time, you have to have a feel. You have to have control of your emotions. When I first started trading, there was a lady, and she's talked about the heartbeat of a stock, the heartbeat of a forex currency pair. And I definitely think that you should spend a lot of time doing that. A good friend of mine, David, talked about how he spent years learning the euro or dollar, and then years learning other pairs. You should, and when you learn that, that's when you can allow your technical skills to be enhanced by your feel of the market. You know where the buyers find value and when the sellers find value. And even though the technical setup is not there 100%, you know where these things, remember, chart pattern technical analysis is all about past behavior. Doesn't mean it works 100%, but you begin to feel and know what happened at this price range. So successful trading is a blend. It's a marriage of being definite on who you are as a trader and what setups you're going to trade, and then allowing your intuition to take place. Now, that doesn't mean you allow your emotions to take place. You allow your feel for the market to take place. As always, please comment, subscribe, let us know what you like. Check us out on Facebook. Are you financially literate? You know about our resources for you. We're really big on our coaching now, our managed forex account, put our expertise for work for you. And if you're looking for signals, we have that for you also. In the end, it doesn't make a difference where you get your information for. It's about your ability to discern whether or not the information you're getting is right for you, and then being able to pull the trigger. We can help you build that trader's mindset to do just that. Thanks, guys, and I'll see you next time.